Hello, this is Jenny Clark with Solvability, and we're going to continue our series called What's Up with Mitch. So, Mitch is a small government contractor, and he's been in this federal market for a while. He knows what he's doing. He's got these little irritating things that are always coming up. And this one he called about was how could we owe that much money in taxes when there's no money in the bank? So, my job with Mitch is to kind of remind him what's going on and talk to him about the details, talk him out off the ceiling, and make sure that everything he has concerns about is taken care of and is being dealt with appropriately. Great question, though, from Mitch. How come we don't have any money in the bank, but we owe this much in taxes? And the first thing that popped into my head when he asked that question was, Mitch, remember, we have a zero balance bank account. You look on the balance sheet, it says cash, it says zero, but that doesn't really mean we have zero in the bank. That just is how we manage our money. So don't let that worry you. Mitch has 4 or 5 questions he wanted me to go through. And so I'm going to run through those with you and kind of give some explanation what I shared with Mitch, because you're going to find it's probably similar answers in your own situation. Mitch is a bottom line kind of guy. His thing is always to say, I just want it all to work. He wants to know it's all taken care of. So his first question, if we made that much money last year, where did it go? He's looking at, he paid taxes on $400,000 worth of income, and he's trying to figure out, well, where's my $400,000? I should have it sitting here in a golden block or something like that, or I should be able to see it sitting in a CD or something like that. It's all been reinvested in the company. When you're talking about cash and talking about things in the bank, it's a lot different than having cash flow, which is when money came into your company because your customers paid your receivables, and you use that money to take care of payroll, to pay down the credit cards, to pay some notes payable, to reduce your line of credit. It's always up and down in flow, and it's not just cash. It's cash flow, and the better term for it would really be working capital or float in a way. It's the money that you know is inside your company that's running it, so you're never going to zero. But at the same time, you're always like, please let me get that payment from that customer before we have to pay the 401k. So you're not going to be seeing it sitting in cash someplace. It's invested in your company. It's spread around the balance sheet. There are reports that you can run. There's something called a statement of changes in cash flow that usually a CPA would prepare. And I know how to do these. I have to look at a book to figure it out, but it talks about adding back depreciation expense and what's in payables, what increased, what decreased. Actually, to me, that's way too complicated. It doesn't tell me what we need to know. But what I do like to look at is, did we buy a bunch of equipment last year? Do we have less money on accounts receivable aging because we collected it? Or is our accounts payable, it was last year $100,000, and at the end of this year it's $600,000 because we've got a big subcontractor that's part of that number? It's those kind of things. It's in the balance sheet somewhere, but it's not going to be sitting in cash. This is a complex business. There's a lot of money floating around, and it's not always showing up where you expect it to be. Second question, is there something we need to do now so we don't owe so much next year? Great question. I don't really recommend that people at the end of the year in December go out and spend a lot of money on equipment, although that's what a lot of people do. You don't want to suck up all your cash at the end of the year so that you don't have money in January. At the same time, what you're usually told by a tax accountant is go ahead and buy some equipment, because you get 100% write-off as a small business for that equipment up to certain dollar limits. It's called Section 187. And I want to say the dollar limit's in the $500,000 range, but don't quote me on that. And so that's why a lot of companies will wait till the end of the year to go out and buy equipment. And that seems to work pretty well. But you don't want to use all your cash to do that. You've got to plan that out so that you don't have a cash crunch in January. Because January, if you think about it, is getting paid off the stuff that you build in December. In December, you had all those holidays, people took off, there weren't as many people working, your revenue is going to be lower for December, And in January, when you're looking to get paid, sometimes the people that have to approve your invoice on the customer side are still on their Christmas break because they have a lot of leave to take. Then there's Martin Luther King, there's New Year's Day, it's a lot. So just think about that. Is there something we need to do now so we don't owe so much yet next year? Yeah. Here's what I would recommend that you do. At the end of the year, identify before you get toward the end of the year. You should be doing this in October and November and December. Estimate what your net income is going to be as you move toward the end of the year. It shouldn't be a big surprise. You know what your payroll expenses are. You know what your rent is. You pretty much know what you bill on every single contract. You should be able to estimate that fairly accurately to tell what your net income is going to be by the end of the year. Go talk to your CPA, your tax accountant. Make sure that you're giving them the information. You're asking them very specifically, what action do we need to take? Because you're balancing your company net income and your personal. Because if you bonus it out to yourself, yes, that's great because it'll be an expense to the company. But if you wrote yourself a bonus, you're going to pay more taxes on that too. So it's not always a win, but there can be other alternatives that you could use for how to have expense that isn't going to have the same kind of financial impact personally. How do we show enough profit to keep the bank happy but not have to pay so much in taxes? That's a great question as well. So your bank is looking for you to have steady growth in revenue, steady net income. They'll look for it to be a good percentage of sales. They don't want to see all this bouncing around of net income month to month. They want to be able to say, hey, we're banking a profitable company. They are always current on their line of credit. They're not calling us up every month and asking for an increase in their line. They seem to be good stewards of the money that we're loaning to them, and we feel confident about where this is. So at the end of the year, you've done that all the way up through November, and your banker's just gone to his boss and said, this is a great company. I'm so glad they're part of our portfolio. Then you spend a bunch of money in order to get your taxes down. The banker that was glowing about you last month is looking at your year-end financial statement and say, what happened? And you're like, well, my tax account told me to do that. Well, you need to balance these things. So get some advice, and particularly go out and get advice from other federal contractors and find out what they're doing. You need to be looking at ones that are the same type of corporate structure you are, that are S corporations, if you're an S corporation, an LC if you're an LLC, because there's a lot of different implications depending on how that works, depending on your corporate structure. Next question, can the company give us the money to pay our personal taxes? Well, sure, that company could loan you the money. They could bonus it out. They could actually, you could take it as a distribution or a draw. Again, think about what you're doing. If you're taking cash out of the company, are you making it harder for the company to operate in the next 90 days or something like that? What kind of balancing do you need to do to make that work? For LLC companies, sometimes there's a agreement. I can't think of what it's called. It's maybe the operating agreement or something like that. The member agreement that talks about the shares that are held by each member. And sometimes you run into situations where one of the two partners in the LLC needs money and the other one doesn't, but you have to take the money because whenever money's taken out, it has to be taken out proportionately. What are some other ways we can give the owners more income and benefits while managing tax liabilities? You can create some things that are similar to your 401k plan, but that are specifically for owners, that you can put money away in an owner's plan. There are also insurance products that you can buy to do similar things. So you need to know how to operate as a business owner, but you also need to know how to operate as a government contractor. Some of these costs, interest expense and things like that, are unallowable. You can spend them, but you can't claim them. And it's always confusing to people, the difference between unallowable for government contracting, which is interest expense, entertainment, lobbying, first class airfare, contributions, sponsorships, things like that are unallowable, but they tend to be deductible. And I think the biggest change that's happened recently is entertainment in the future is not going to be deductible anymore, which is going to be a big change. So Mitch has said, I just want it all to work. And so we want to make that happen. Mitch is unstoppable. Are you unstoppable? You know where you want to go. Solvability can help get you there with the cost and pricing intelligence you need to accelerate and scale your business. Most of our clients get started with our simple product called the Wrap Rate Calculator. Just shows you how to calculate burdened labor, which is applying your overhead and G&A and your profit. So you can say, this is what we're paying people. This is what we need to be able to bid and bill. Or the other way around, sometimes here's the bill rate that our prime told us we're going to bid. So based on that, how much can we afford to pay the person that we intend to hire here? That's what a wrap rate calculator is doing for you, a multiplier. What we also do later on, if you need something more advanced, is we help you figure out what your overhead and G&A rates ought to be. If you want to get the wrap rate calculator, you can just go to our website at solvability.com. That's S as in Sam, OLV as in Victor, and the word ability.com. Or if you got something more urgent, more extensive, a question you feel like you might need some services to help you with, text me. My mobile number is 256-882-6276. And just tell me who you are, what your company is, and what your urgent thing is, and we'll set up a call and talk about what needs to happen and what we might be able to do with you and how to get that problem solved.